Let's go to Market Watchers, D.R. Barton. We've got David Bahnsen and Fox Business's Deirdre Bolton. Deirdre, obviously the big battle for investors is weighing an improving economy with the higher interest rates that could clamp it down. What do you think?
Well, Neil, I saw you had in your studio there that 10-year yield, right, that we saw last week, highest point since 2011. So that is, even among the chatter here, what a lot of people are worried about. As we know, the higher that interest rates go, the higher all borrowing becomes, right, whether that's mortgages or car loans or any kind of loan, right? We all end up paying more, businesses the same. So that is a damper. At the same time, that it's pretty clear that the Fed is also going to continue to raise interest rates. And of course, the added pressure overnight, which I know you've been talking about and covering, from China, right? That Shanghai comp was the worst performance in 3 months. So just two punches to the gut here, Neil. And as you know, the Dow is pretty much at its low of the session. Yeah,
you're right about that. DR on the Shanghai falling about 3.7%. The rough equivalent if we fell on our Dow 14 or 1,500 points overnight. So it was a shock to the system after a market that had been off for a while. Now people fear that China can't get out of its own way, which means maybe the rest of the world can't get out of its way. What do you think?
Well, I think it's always a concern when the rest of the world is not helping the U.S. strong U.S. markets kind of pull on the oars and help us continue this upward path, Neil. And the big issue is China and all of their trading partners. When China's doing poorly, their trading partners suffer, and that means we get a global slowdown. If that were to happen, that would be a big issue with the U.S., but it might take a couple of quarters for that to really catch up with us. So I believe what Deirdre is right that the interest rate issue is the one, but I think that's really short-lived right now.
Yeah, David, if you were to cash out for every downdraft we've had, even a multi-day one, you would have been richly burnt in doing so. Now, obviously, that strategy doesn't work, ad nauseum here, but what do you tell your own investors who are looking at this, getting nervous? They see it building steam, and they see, a lot of the sectors of the S&P 500 taking it on the chin.
I tell them to not do anything. I tell them that exactly what you just said, that had they done such, they would have gotten burned last week, last month, last quarter, last year, and so forth and so on. The fact of the matter is that 3 months ago, the Dow was 3,000 points lower than it is, and the 10-year was 30 basis points less than it is. So if these rising interest rates behind a strong economy are so awful, I'd like to know how the 10-year moved up 30 basis points and the Dow moved 3,000 points. It doesn't make sense. You're going to have repricings that have to take place along the way, but we right now, with this sell-off, are exactly where we were 1 week ago. I think that it's a major overreaction and, in fact, is positive news that we have such a strong economy pushing the yield curve wider.
All right. Deirdre, one of the things that's been raised is if you are in a raising rate environment, do you stick with the groups and the individual issues that have gotten you this far? Technology comes to mind. Technology, of course, had a rough September. It's not having so far a great October. But there are those who embrace small cap stocks, thinking that, ironically, they're not impervious, but more resistant to the effect of higher interest rates. And that's another group that the Wall Street Journal and others have played to sort of re-strategize, not sell anything, but get your priorities right. And in a raising rate environment, they might surprise you. More strategies like this. What do you think? More strategies indeed, Neil. And I do think it's worth every investor considering what he or she is doing in his or her portfolio and adjusting for a higher rate environment. And let's face it, that's where we're going. And I know a big focal point from the analyst community, also from the trading community, is that we're going to begin to get earnings from some of the bigger banks towards the end of this week, right? Wells Fargo, Citi, JP Morgan. And normally in a rising interest rate environments, even though these are clearly not small cap stocks, which is what you asked me about, but normally these banks, their profit margins get thicker, right? In a rising rate environment, normally that's a positive sign for these companies. So I do think towards the end of the week, we're going to look a little bit brighter than where we stand here
on this rainy Monday, Neil?
You know, the rainy Monday in the month of October, even though it's not the worst month for stocks, it is the one where we remember some scary developments in 1929 and 1987. The leverage buyout fiasco around UAL that brought us the crashette, if you will, of 1989, 2008. I could go on and on and on. So there is something to this month that it wouldn't take much to spook investors. Is that justified?
Well, I think that you know, markets do have memories, and people do remember things like all of those dates. And you said we could keep stacking them up there. Neil, September is traditionally a worse month on average, but October's where those big hits come along.
No, finish that thought.
So I think, Neil, that. Yeah. All I was going to say was I don't think we can get back on our heels just because of that one historical issue. I think this pullback may have a little life left in it, but then I think we have another good leg up coming.
When you weigh the environment, David, do you look at trade? And of course, Deirdre touched on it with the Shanghai development. And, you know, we're at a major league impasse here with the Chinese. They claim that they can fight this till, you know, hell freezes over. They didn't say that, but that they're in no rush to do a Canada, no rush to pull a Mexico and strike a quick deal with the United States, or so they say. What do you think?
Yeah, I don't think that they are in the same position from a negotiating standpoint that Mexico, Canada, even the European Union were. I think that this will play out differently. I think a lot of that has to do with us, though. I think our objective is slightly different. I think the president primarily wanted a sort of cosmetic victory around some of those other trade deals. We had the leverage. We modestly, around the edges, improved some of those trade agreements. I think with China, there's a broader objective at play, the intellectual property theft being one of the biggest. And so I would not, I don't think any investor ought to be ignoring it, but I don't believe that we're at an impasse. I think that both sides have kind of said all along, this is something that's going to be after the midterms, and I expect it to be something we see more development in, Neil, in the first quarter of 19.
Very interesting. In the meantime, we're going to be looking at the third quarter results and earnings for corporate America, larger corporate America, and they're expected to be pretty good. I think around the 20% uptick, Deirdre. Now, that's down a little bit from some prior quarters, but still off the charts, and that's sort of baked into the cake here. What do you think?
It is baked into the cake, and I think, as always, investors are going to be looking, in addition to profits, which in some respects is how much companies are squeezing their workers, and getting a bigger bottom line, is also what are their competitive stats like? What are their sales like, right? Are they actually driving new business, getting new business? I mean, those are two big questions. And one thing I just want to mention quickly about China as a follow-up is the PBOC, People's Bank of China, Neil, has cut rates 4 times, or has basically lessened, I should say, the reserve requirements 4 times this year. So they may be saying, China may be saying it's not worried about trade, but what the People's Bank of China is doing and trying to spur its own economy is telling a very different story.
No, you're absolutely right on that. They doth protest too much.